Hello and welcome to Morning Markets. I'm Roger Peterson. Thank you very much for joining us. Here are some of the stories we're tracking for you in the BNN Bloomberg newsroom. The Trump administration has threatened to indict Federal Reserve Chair Jerome Powell over congressional testimony he gave last summer about a Fed building project. The U.S. president has previously blamed the Fed's policy for holding back the economy and has also spoken publicly about potentially firing Powell. Powell says the move is a pretext to gain more influence over the central bank and monetary policy.
No one, certainly not the chair of the Federal Reserve, is above the law. But this unprecedented action should be seen in the broader context of the administration's threats and ongoing pressure. Public service sometimes requires standing firm in the face of threats. I will continue to do the job the Senate confirmed me to do, with integrity and a commitment to serving the American people.
U.S. bank stocks are seeing some pressure today. That after President Donald Trump called for a one-year cap on credit card interest rates. 10% would be the cap. Trump says the cap will come into force on January 20th, but U.S. lawmakers say the move would require approval from Congress. A joint statement from 5 lenders says the cap would reduce credit availability and be devastating for millions of Americans. Groupe Dynamite is raising its full-year outlook following strong holiday sales. The Canadian clothing retailer says same-store sales surged 31% in the fourth quarter. And there was also significant online revenue growth that outpaced brick and mortar sales. Store openings for the year are also now expected at the high end of its outlook with 20 new locations. Looking at the markets, the TSX continues to surge. Wasn't too long ago we were talking about it hitting 32,000. Now it's looking at 33,000. It's up 0.61% for the day. South of the border, different story though. All the talk with the Fed and everything that's going on, it's a bit of a mixed bag right now. You can see the S&P 500 and the NASDAQ both pretty much a wash, while the Dow Jones is off by about 0.22%. Now to the extraordinary confrontation between the Trump administration and Federal Reserve Chair Jerome Powell. Federal prosecutors opening a criminal investigation into Powell, who fired back in a video statement charging that this is all about political pressure by the administration to intimidate the Fed over setting interest rates. ABC's Elizabeth Schultz has more.
Good evening.
In a rare public statement Sunday night, Federal Reserve Chair Jerome Powell confirming the Fed was served grand jury subpoenas as part of a probe into his testimony about the central bank's building renovation costs. But Powell says what the investigation is really about is retribution.
The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president.
Since he took office, President Trump has repeatedly demanded the Federal Reserve slash interest rates. Powell insists the Fed won't bow to political pressure.
This is about whether the Fed will be able to continue to set interest rates based on evidence and economic conditions, or whether instead monetary policy will be directed by political pressure or intimidation.
Overnight, lawmakers denouncing the investigation into Powell. Republican Tom Tillis, a member of the Senate Banking Committee, threatening to withhold his vote for any nominee to replace the Fed chair, writing, if there were any remaining doubt whether advisors within the Trump administration are actively pushing to end the independence of the Federal Reserve, there should now be none. It is now the independence and credibility of the Department of Justice that are in question. President Trump now denying involvement in the investigation, saying, I don't know anything about it, but he's certainly not very good at the Fed. 2 weeks ago, Trump said this.
We're thinking about bringing a suit against Powell for incompetence. Because think of it, these aren't outstanding buildings. These are small buildings.
The $2.5 billion renovation of the Fed's Washington headquarters became a target of the president's during a tour of the construction site in July. Powell pushed back, saying Trump cited inaccurate numbers on the cost.
This came from us?
Yes. I don't know who does that.
You're including the Martin renovation. You just added
our entire capital plan.
Yeah, you just added in a third building is what that is. That's a third building,
Well,
including
no,
the
but
Martin building.
it's a building that's being built.
No, it was built 5 years ago. We finished Martin 5 years ago.
It's part of the overall work.
But it's
So,
not new.
So we're going to take a look.
Powell, who Trump handpicked to lead the Fed back in 2017 and has served at the central bank under 4 administrations, ends his term as chair in May. The president has said for months he wants Powell out sooner.
Second week of January. Okay, for more on this, we're joined by BNN Bloomberg's Lindsay Biscaya. Oh, my goodness.
I think every Monday of January is just going to be a big surprise in terms of what's happening around the world. But yeah, this is crazy to see. I mean, we've got the details in terms of what exactly is happening here. The U.S. Trump administration saying one thing, Jerome Powell saying another thing. But it's just phenomenal to see a Fed chair come out with a video statement. Last night, we saw Jerome Powell issue that statement, directly accusing Donald Trump of trying to do this with a pretext that really what the U.S. administration wants and what we've seen Donald Trump pressuring Jerome Powell to do is aggressively lower those interest rates. And, you know, we've heard Donald Trump, of course, musing about firing Powell in the past. He's also talked about or tried to fire Lisa Cook. And of course, the Supreme Court is taking up that case later this month. So that's a new development as well as another board of governors for the Federal Reserve. But it's really fascinating to see all of this playing out. As you heard Donald Trump saying he knows nothing about it. Kevin Hassett also saying he knows nothing about it. Whether there is an indictment that comes from this is still yet to be seen, but it's phenomenal to see all of this playing out and the back and forth between the two as well.
And that's the thing; it could go nowhere too.
It could go nowhere. Yeah.
Do we know when that may go nowhere or may go somewhere?
I think it's still too early to tell. At this point, it seems to be more of a back and forth. I'm sure we'll hear more, if not later today, later this week. I'm sure there will be some more details coming out. Yeah.
All right. And what do the markets think of all this?
Well, that's the thing. I mean, as you've been saying this morning, we're seeing the markets slip, but not as much as we might expect. Some economists are saying that it could actually take some time before we see the repercussions of what's happening here. Of course, we saw the U.S. dollar falling today, its biggest drop since the start of the Christmas break. But we were speaking with Paul Harris today of Harris Douglas Asset Management, and he says that this clearly shows that the U.S. government wants control and political power over the Fed. And while we haven't seen anything really crazy happening yet, he kind of went through some of the things we could see. Take a listen.
It probably would lead to a steeper yield curve. The long end of the curve will steepen even more. Rates will go up, I think, because inflation is probably much bigger risk today after this than it was prior to this.
Which would be the opposite of what Trump was pushing for.
Yeah, I think and I think that probably, short rates coming down is one thing. Long rates going up is much more difficult. And, a lot of things in the United States are based on the long rates, so mortgages especially. And so, they were trying to do two things. They're buying back debt to drive down rates in the long end, and they're trying to get rid of the Fed and push down rates in the short end.
So important to note, the Fed is the major central bank of the world, right? Harris was saying that this morning, that really it is what other central banks around the world, they look to the Federal Reserve in the U.S. for a lot of direction. So this is phenomenal that we're seeing this happen. And Harris saying, of course, we're not seeing much movement yet. We could see a lot of movement in the bond markets over the next couple of days or weeks. But we're also seeing, as you're talking about today, the price of gold and silver going up. Of course, a lot of investors who usually invest in the U.S. dollar, if they see some uncertainty there, which they might be today, then they run to that so-called safe haven of gold and silver. And we're seeing those prices going up, which is helping the TSX to go up today as well. So it's interesting to watch it all play out.
All right. We'll leave it on that note for now.
Yeah.
Lindsay, thanks as always. BNN Bloomberg's Lindsay Biscaya. Coming up after the break, we'll get a closer look at the markets in light of the news coming out of the U.S. That is next. Well, the markets are sitting around record highs for the morning. We'll continue to track this as we turn to the news surrounding the Fed. Chair Jerome Powell saying the U.S. Central Bank had been served grand jury subpoenas from the Justice Department threatening a criminal indictment. Let's get more on this and everything else from Teresa Schutt, Chief Investment Officer at Harborfront Wealth Management. Teresa, thanks as always for joining us.
Thanks, Roger. Great to be here.
Let's get your thoughts on what is the story of the day, possibly maybe the year right now, depending on what's next week, what happens next week. But the Fed.
Absolutely. Yeah. I mean, with these subpoenas, Powell becomes the latest perceived adversary of the president to face a criminal investigation. And I think what's interesting is Powell has come out and said, exactly what he thinks this is, which is, a way, for the president to influence and put pressure on the future path of interest rates. So this is really quite, something that's remarkable. The market's obviously reacted negatively to the news. The Dow Jones is down. The S&P is down. Even the NASDAQ is down. Gold and silver, they've moved higher. I mean, these safe haven assets, that are becoming the preferred choice vis-a-vis the U.S. dollar. And I think, we're going to see, yield curve steepening, I think as an earlier commentator said, which means the bond vigilantes might be back. More concerns about inflation. If the ability of the Fed to really contain inflation becomes a concern, you're going to see, more and more of that, kind of transpire in the market.
And now they've kind of bounced back a little bit, the markets. I don't know if you just saw there. They're at a wash, maybe up slightly, two of them, one of them still down. And the TSX, though, those are the bond yields. And now the TSX, though, it's chugging along today. It's like it didn't matter what happened down in the States. Or is it reacting to it as well?
I think it's reacting to it. I mean, obviously, the TSX is heavily dependent on the materials sector. We saw that through 2025. That 30% return in that industry sector helped the TSX, frankly, outshine the S&P 500 over 2025. And so we're seeing, some of that, benefit, I guess, of this announcement, really come to gold and other material sectors, which is really, a big part of the Canadian economy. So I think that's going to continue to sort of track. And I do think that there's obviously more to come, but you're right, the markets have rebounded, but I still think it's going to weigh heavily. And I think there's going to be this new theme of kind of sell American assets. We saw that last year, a lot of inflows into AI stocks, but a lot of that being, the U.S. currency being hedged. About 80% of those inflows were hedged away from the U.S. currency. So that's investors wanting to participate in the kind of the AI rally, but not have exposure to the U.S. administration. So I think that's going to continue as more of these doubts start to grow about Fed independence. And the fact that Powell has pretty much, called it for what it is, I think, the markets are, really have to kind of take that in.
Mm-hmm. Where do you see the money moving?
I think international markets are really appealing. If you look at, Europe and Japan in particular, they have some very compelling, factors. They're already lower value. There's lower valuations there. We're seeing, strong performance in Europe, defense, aerospace, financial sector. Japan, we've seen a lot of corporate reform, strong profits, and even over 26. These are two markets that outperform the U.S. So I think, we tend to be very focused on the U.S. stock market, but there's other options out there. And I think if there's, this continued kind of interference with the Fed, again, I think you're going to see some of those inflows start to leave and more pressure on the U.S. dollar. I think that's going to be kind of a continued theme, at least for Q1.
And with the Canadian market, do you see money coming here as well? I mean, we've outperformed them. Is it going to continue that, or are people going to look offshore?
I think there will certainly be some strong inflows coming into Canada. I mean, we are obviously a smaller market. We benefited again from, material sector. Financials have done well as well. But I think, from an investment perspective, I think you never want your eggs in one basket. So I think, obviously Canada, I think we'll see some inflows here, particularly if we start to see a rebound perhaps in the energy sector, with some, expansion of these pipelines and some of these projects getting fast tracked. That will certainly attract foreign capital. So, if the Carney government can proceed to get some of those projects done, I think that, that will obviously benefit the TSX.
And how important is it? Does it feel that the Prime Minister start seeing some fruition to the work that he's doing right now? How much longer do people want to wait before they start questioning whether this go away from the U.S. is going to pay off?
Yeah, I think he's taking the right steps. Obviously this week he's going to be in China, where he's set to meet with the president there. And I think, obviously the conversation will be more on agriculture and whatnot. But I think, there hopefully will be some focus on energy, because the reality is, without energy exports, our trade balance as a nation is actually negative. And so, I think, kind of reestablishing that relationship with China, it was pretty frosty since 2018. I think that's really important to establish that trade corridor. I think there's tons of opportunities to export more of our resources to Asia. I think that's part of it. But I think again, we've got to get that pipeline capacity built, and it seems like they're taking the right steps. But there's a lot of work to be done. You need a lot of collaboration with both provincial and municipal governments to get some of these projects built. So we're in the early innings, but I think the right steps are being taken. But I think this is our number one issue. Obviously, is Canadian productivity and investment into our capital formation, IP, everything.
And before we go, just one last question with energy, oil. There's a lot of instability right now. We already had Russia, but now we have Iran and Venezuela. You could argue probably is more unstable now than it was before, because at least you knew who was in charge. Now we're still not entirely sure.
Yeah. I mean, certainly, OPEC faces a dilemma for sure. Whether to cut production or not. To cut production, each country has to manage their own self-interest, but I think no one really wants to poke the bear. Really, with what we've seen with Venezuela, clearly that is that level of foreign intervention is pretty unprecedented. But at the end of the day, it's going to take billions of dollars and many years to rebuild that infrastructure. All that metal in the ground already, it's deteriorated. It'll require a lot of investment. And with frankly, the oil trading at less than $60 a barrel, it's hard to incentivize U.S. companies to go in there and start to invest their capital in Venezuela, even though it sits on the largest reserve in the world, still producing less than 1%. So this is a game changer. Obviously, I think there is still a glut. Canada obviously benefits from higher prices for oil. So I think there's a lot that needs to kind of happen to really have a better sense of where energy might go. But that said, I mean, it just increases the importance of Canada finding new export partners for its oil and gas.
Okay, we're going to have to leave it there, but Teresa, thank you as always for joining us.
Great to be here. Thanks, Roger.
Teresa Schutt is Chief Investment Officer at Harbourfront Wealth Management. Coming up, today's market drivers with Bloomberg's Monique Malima. Take a look at some of the market movers for today. We're joined by Bloomberg Equities reporter Monique Malima. Monique, thanks as always for joining us. How are you?
I'm good, thanks. Thanks for having me.
All right, and there's some stocks that are doing well as well. We'll start off first with Albemarle. What's happening there?
Yeah, so Albemarle, they received a wave of price target increases today. Scotiabank, Jefferies, and Mizuho all raising their estimates for this company's stock. They're in the lithium space, and the lithium prices have really been rallying recently, and analysts are expecting that to continue and for that to provide a boost to the company's share price going forward. The lithium is used for things like electric vehicles, battery energy storage, and a number of other applications, and they see the demand for that continuing while the supply is tightening. So they really see a lot of opportunities for this company to continue to see growth throughout this year.
And just looking at raising their EBITDA as well over the next couple of years, things are looking good for it.
Yes, definitely.
All right, next up, Freeport, rising as well.
Yeah, so Freeport, they received a price target boost by about 40% at Citi today. The analysts there see a lot of opportunities for this company. Copper prices have been hitting record highs recently, and they expect that rally to continue and to boost Freeport's earnings in the meantime. Copper has had fears of a tightening supply, and that's helped to move things forward. And they also note that for Freeport specifically, there's some more opportunities in terms of its ramping back up Freeport had to suspend its Grasberg mine in Indonesia after a deadly incident last year, and it started to ramp back up production there. And while they see that that's going to probably weigh on its earnings for the fourth quarter that they'll be reporting soon, they're saying that this is going to be kind of the end of the worst of these disruptions, that going into this quarter of this year, the beginning of 2026, that things are improving for the company and are expected to improve even more with production rising higher.
All right, and ExxonMobil, the focus with the president in Venezuela.
Yes, so ExxonMobil, their shares are down today after U.S. President Donald Trump said that he's inclined to leave Exxon out of his plans to rebuild Venezuela's energy industry. A number of the oil executives in the U.S. met with President Trump on Friday, and Exxon said that the current state of Venezuela is uninvestable. They cited legal and commercial concerns, and the president said that he didn't like that comment, he didn't like that response. Some of the companies that were there, like Chevron, were more optimistic on the opportunities in Venezuela, and as a result now Trump is saying maybe Exxon won't even be involved in it. So that's why we're seeing their shares down.
Oh, of course, and everything with the instability that's unfolding with a lot of this, we're seeing gold and silver soaring, which is good news for the miners as well.
Yes, so gold and silver both hit new record highs today, and that's been raising the miners even higher. We're seeing share price gains, and the New York Stock Exchange's Gold Miners Index hit a record high as well. There's the uncertainty, like you mentioned, with Venezuela. There's uncertainty with Iran and what's happening there. And then a lot of uncertainty around the U.S. Federal Reserve. That's what's really driving a lot of this push today. The U.S. Department of Justice issued subpoenas to the Federal Reserve and is threatening potential legal action against them. And that's caused a lot of flow into safe haven assets like gold and like silver when people have more of that uncertainty around these U.S. institutions and as well for the rate cut path going forward.
Okay, Monique, thanks as always for joining us. That was Bloomberg's Monique Molima. Well, the Prime Minister's trip to China to discuss agriculture and trade comes at a time when farmers here at home are struggling to turn a profit. Tariffs continue to drive down market prices, but as CTV's Alison Bamford reports, a meeting between Mark Carney and China's president is sparking hope among producers.
This time of year, Ryan Scragg should be hauling grain. Instead, he's pushing snow and wondering what he's going to plant in the spring.
The problem is right now is that nothing pencils out to a profit.
Canola and peas usually make up about 70% of what Scragg grows, but both crops face punishing tariffs from China that have pulverized market prices. Right now, all of Scragg's bins are full, but normally for this time of year, he said at least 20% of his grain would already be sold.
I'm waiting as long as I can. At some point, there's just no more option of waiting.
Many face the same challenges, now clinging to hope that upcoming talks between Prime Minister Mark Carney and China's president will progress trade negotiations.
What we're hoping to see now is that we can translate some of that engagement into action on these issues.
Carney's visit to China, slated for next week, is planting optimism ahead of spring seeding. But farmers still mindful that these tariffs were put in place last March and removing them takes time.
I don't see them inking a trade deal or something that immediately fixes it. But I think doing anything is better than doing nothing.
For now, farmers like Scragg will weather the storm. He plans to cut back on canola and nearly drop peas altogether this spring, seeding a little bit of everything, hoping he can grow a profit. Alison Bamford, CTV News, near Prince Albert.
Coming up, the Trump administration has threatened to indict Federal Reserve Chair Jerome Powell. More on that when we come back. Shares of Lululemon are moving higher. They're up 2.15% right now after the clothing retailer said it expects fourth quarter sales to come in at the higher end of its guidance. Revenue is expected to be more than $3.5 billion US thanks to strong holiday season sales. This comes as Lulu's founder and also Elliott Investment are pushing for changes and new board members. The CEO will also be stepping down at the end of the month. Shares of SunOpta are surging today. Look at that. They're up nearly 20% right now. The natural and organic foods company issued a full-year revenue forecast that beat expectations, with revenue growth expected to be 13%. SunOpta also boosted its adjusted profit outlook for the full year. The raised guidance comes despite the company facing challenges in October. China and the European Union have agreed on steps to resolve their dispute over the imports of Chinese EVs to the EU. The EU says Chinese manufacturers' plans for investments in the EU will also be considered. Both the US and Canada have imposed a 100% tariff on Chinese EVs. The announcement comes as Prime Minister Mark Carney prepares for his visit to China this week. And taking a look at the markets, the TSX still surging. It's up by 0.63% as it pushes toward 33,000 south of the border. And it's a bit of a mixed bag down there. A wash for the S&P 500 with the news about the Fed. The Dow off by about 0.2 and the NASDAQ up by 0.2. And the Trump administration, as we've been talking about, has threatened to indict Federal Reserve Chair Jerome Powell over congressional testimony that he made last summer about a Fed building project. Our next guest says these criminal investigations are a mistake, and if Trump is successful at removing Powell, the actions will simply backfire. Here to give us his perspective is Ryan Young, senior economist at the Competitive Enterprise Institute. Ryan, thanks very much for joining us.
Thanks for having me.
Why do you think this is a bad move?
Because central bank independence is key to affordability, stable prices, America's international trade. All these things are very important, not just to the administration, but to all of America and all of our trading partners. And that's under threat when central bank policy is made by the president instead of by an independent official like Jerome Powell.
Where do you see this going? Is there enough that it may actually turn into an actual possibly criminal charges against someone, or does it look like this may go away?
I'm guessing the charges will not stick, but the message has been sent. Chairman Powell's term ends in May, which brings up the question, why bring charges now if he's going to be out of office in 4 months? But he's going to remain on the Fed's Board of Governors through 2028 and might be a potential thorn in the president's side. So I think the president wants to send a message, and on the off chance that these allegations succeed, the president can install his own yes man as Fed chair sooner rather than later.
Now, is this the hope that, do you feel that's the thing? The president is hoping that he'll just leave after this? He won't stick around for the rest of his term?
I think that's what he hopes. I'm not sure what's actually going to happen, but the president wants very low interest rates. He wants an easy money policy, and the Fed's not giving it to him. So this is his way of trying to force the issue.
Why do you think low interest rates might be I guess why would you think low interest rates, at least doing it this way, would be a bad thing?
Because the trade-off of low interest rates is higher inflation. Some stimulus might be nice, although with GDP growth in the U.S. coming in at over 4% last quarter, which is fantastic, you might question why there's the need for stimulus in the first place. But the president just has a long-standing idiosyncratic preference for low interest rates and easy monetary policy. He likes stimulus, and the more the better from his perspective.
And how do you feel the market will react if that's how it unfolds, where he does get one of his men in there or one of his women in, depending on who he's choosing? How will the markets react?
They won't like it one bit, because markets love stability more than anything else. They love low interest rates, but they love stability more. And a trade-off of Trump-style low interest rates is less trust in the Federal Reserve, which means even if the official interest rate is only 1%, the market rate of interest is going to be a lot higher because of that lack of faith and trust in the United States government.
Now, we've seen situations like this before in the U.S., I believe, with Nixon, was it not, in the early 70s? How did that unfold?
Yeah, Nixon installed a Fed chair named Arthur Burns, who was a respected economist until he took that position, and then he essentially was Nixon's yes man. He did all the stimulus and easy money policy leading up to the 1972 and 74 elections that Nixon wanted, But it backfired because the trade-off to stimulus now is inflation later, and that's what caused a lot of the great stagflation that we saw in the 1970s.
And you think that we could see a repeat now? Are things different or no?
It's a risk. The economy's fundamentals are in good shape. They've taken some damage from the tariffs and especially the economic uncertainty across the policy spectrum. But the American economy is also resilient. So I'm cautiously optimistic, provided that this investigation into Chairman Powell doesn't result in his removal.
Now, is there a possibility that Powell's replacement could actually maintain the independence of the Fed?
Yes, and that is where Congress comes in. They get to approve whoever the president nominates, which means if the president selects someone who they don't think will be their own person, Congress can say, no, send us someone more independent. That could be its own showdown. We'll find out in the next few months.
Who do you think is the favorite right now? Because, I mean, Trump has said he has one picked out. Who do you think is a favorite, and who would that be okay? Would that be palatable to Congress?
Kevin Hassett is the name that a lot of people are bandying about. Before he entered the political arena, he was well known for having common sense, but he said some things that perhaps might jitter markets since he's joined the administration. So he might be a good compromise pick. Some of the more radical choices the president make, he already knows that Congress might find unpalatable.
Would Congress go with him, though, you think?
That's the question. We've seen 2 dissenting Republican senators so far. They need at least 4 dissenters, and that is hard to come by in this political moment.
And what about the rest of the world? How are they going to react to how this is unfolding right now and also longer term?
Well, it's not going to be good for the dollar's status as a world reserve currency. If this does result in higher inflation and a weaker dollar, that's makes the dollar a little less of a safe haven currency. It can also affect America's trading relations on top of what's already been happening with tariffs.
And I mean, we have up right now, the dollar's off by a quarter point today alone.
Yeah, well, we'll see how that goes. It remains to be seen how seriously markets are going to take the charges. The president pulled something similar with Lisa Cook, a different member of the Fed's Board of Governors, and he did not succeed in removing her. So if he couldn't remove a lesser official, is he going to succeed in removing Powell? So far, markets seem to be taking the news in stride. We'll see if it stays that way.
And assuming his next appointment leans towards Trump, how can he regain the trust of the markets? What will it take for that head of the Fed to regain the trust of the markets?
They are just 1 vote out of 12 when it comes to interest rates, but some gesture of sticking up to the president, whether it's through interest rate policy or through public statements, or the Fed's balance sheet policy, which is another area of concern, those gestures of independence will go a long way towards regaining trust, not just with markets, but with America's allies and trading partners around the world.
Okay, we have to wrap it up there, but Ryan, thank you very much for joining us.
Thank you.
Ryan Young is a senior economist at the Competitive Enterprise Institute. Coming up, what to expect from equity markets in 2026, plus 2 stock picks right after this. As we enter the new year, investors are wondering if markets can continue their bull run into 2026, or will inflation and slowing economic growth spoil the party? For some answers, we spoke to Bruce Campbell, founder and portfolio manager, Stone Castle Investment Management, and he breaks it down for us.
We continue to see and continue to track the downward move of inflation, which of course will give the Fed more ability to lower interest rates. And I mean, there's a lot of pressure and obviously top line news today on, kind of that pressure that's being pushed from the government to the Fed. And so that's one thing we're watching. And then we also are watching a lot of the indicators that we follow. And that we have this top-down process here at Stone Castle. And we're seeing green lights in all of those indicators, including our what we call early warning indicator, which gives us a sense of where things are sort of 3 to 6 months out as well.
What's showing up in your early indicators?
Yeah, I mean, what we're seeing is just strength across the board from the market. So we track the markets on a number of different time frames, and that's one of the things that we're seeing is that strength there. So if we were to see some deterioration, what that means to us is that we generally tend to be a little bit more defensive. We tend to go a little bit bigger cap companies with a little bit lower beta, but we're not seeing that right now. So we continue to see, those areas that have been leadership in the past continue to be strong. We're also seeing a little bit of rotation though in leadership as well. So for probably the last 18 or 24 months, we've seen a lot of talk about the Mag 7. Well, now we're seeing that broadly diversifying out. And so as an example, the Russell 2000 was hitting a new high there on Friday.
It's interesting, yeah, that we've heard so much about that eventually there'll be a catch-up by these smaller stocks. And the Mag 7, it's certainly not down a lot, but it is not at record highs.
Yeah, I mean, it's just kind of going sideways here, and it probably does that. I mean, as those stocks kind of rotate. But you think about the money that's in just NVIDIA alone, if it starts to come out and rotate into other areas, there's a lot of money there that can move other stocks to new highs.
You have some stock ideas for us, starting off with one called Energia. Can you remind us what they do, Bruce, please?
Yeah, they're in renewable natural gas. And this is a really fascinating story because that was a really big trend going back a few years ago. This company came public and they got themselves probably over their skis a little bit as far as building facilities. And they almost went bankrupt. They were recapitalized, and now their focus continues to be on renewable natural gas. But instead, what they're doing is they're working with companies to build those facilities. So think about a company like Frito-Lay, for example. They have all of these facilities around the world that produce potato chips, and with that potato chip comes a lot of waste. And so what Energia is doing is they're taking that waste, turning it into renewable natural gas, which can then turn around and power those facilities. And Frito-Lay is one of their clients globally. And if you look at what they've done from a sales standpoint, they continue to ramp up their sales and get new orders and continued orders. They just turned EBITDA positive on the last quarter, which is really exciting news. And they're really not on the radar of any institutions because of the fact that they've gone through this transition and this recapitalization. And as a result, they're really starting to get more attention, and they'll show up on the radar of a lot of institutions this year.
Another stock that you do, I believe, like the look of is Lululemon. Bruce, would you be a buyer of it right now?
We don't actually like Lululemon.
Oh, I'm sorry.
It ranks around 1,100 of our in our U.S. rankings of 1,900 companies. So it's fairly far down. What we always look for, of course, is that earnings and revenue acceleration. And right now, we haven't really seen that. It sounds from the news, though, that Lululemon's had good numbers. And so we could see a bit of a ramp up here.
But what could get you warmer on Lululemon, Bruce?
Yeah, I mean, if we saw a quarter or two more of sustained sales, then at that point in time, it rises up through our ranks because we're looking for that revenue and earnings acceleration. And then that's where we'd be more interested in looking at it for the continued ramp and acceleration.
And finally, Bruce, how are you playing gold? Are there any gold names that you like, or do you buy producers, or do you buy seniors or intermediate developer type companies?
We tend to be in the middle there. So yeah, we have some senior producers, and then we also have some intermediate producers. We don't do too much of the pure exploratory companies just because we don't have enough technical knowledge when it comes to trying to figure out whether or not those deposits are going to be productive. And also, the second thing is it takes so long now to get through that process from where they find or maybe are finding that discovery to when they actually build a mine. And it costs a lot more in a lot of cases, and it takes a lot longer. So we try to avoid those, especially in a situation like this where we're seeing, really strong cash flow improvements from the producers because their cost of production versus what's happened with the commodity over the last couple of years is such a big difference that every single dollar that adds to the price of gold or silver just falls to their bottom line.
And you are keen on the cannabis space. You've invested in it over the years. It's been a tough sector to own in many cases. Are there any names you like there right now, though, Bruce?
You know, it still continues to be really challenging from a political standpoint, just because there's so much on again, off again news of what's happening in that sector that right now we've just stepped back. We don't have any exposure in the sector. And, you know, we're just kind of watching and waiting. If we were to get some sort of regulatory changes in the US, then that really fell across the board and helped some of these companies. There's a lot of value there, but we just, because of the volatility and the political nature of that sector right now, we've just kind of stepped back.
And that was Bruce Campbell, founder and portfolio manager at Stone Castle Investment Management. Coming up, we'll check in on the markets on Bay and Wall Streets. A new study shows that thousands of restaurants in Canada have closed, with more to follow in 2026. The study, done out of Dalhousie University, shows that more than 4,000 restaurants across Canada could go out of business this year. CTV's Kimberly Johnson has more.
Al's Diner has been serving up breakfast for 36 years. Over that time, owner Al Ayoub says his industry has seen challenges, and right now is a tough time.
Your bottom line gets smaller and smaller. You want to raise your prices, so you take a chance and scare people away. I'm not one to do that.
He says increasing food prices and wages are his biggest expenses. To keep costs down, Ayoub shops around and says owning his building has helped a lot. With plenty of dedicated customers, Al's Diner is not at risk of closing. But a new study suggests thousands of other restaurants could be forced to close this year.
I feel sorry for the ones that can't adapt to it. There's a lot of restaurants out there that are struggling and having a hard time.
A new study from Dalhousie University shows that more than 4,000 restaurants in Canada are projected to close this year. That's after 7,000 bistros, cafes, and eateries shut their doors in 2025.
And what we're seeing right now are consumers under tremendous financial pressure. They're having a hard time buying food at the grocery store, so they're not spending as much time in food service.
Restaurants Canada says other major costs for establishments include rent and insurance. It says 41% of restaurants are operating at a loss or barely breaking even, but are working to keep costs low because they know customers are budgeting. As costs mount, some customers say they plan on making changes.
I probably plan on eating out less. It's gotten really expensive. It's nice to go once in a while, though.
I would say probably about the same, but spending less. Looking for cafes rather than full restaurants, looking for snacks rather than full meals.
Kimberly Johnson, CTV News, Ottawa.
Interprovincial trade barriers could be one reason why Atlantic Canada residents are seeing higher grocery costs. CTV's Paul Hollingsworth has more.
A father of four and a busy shopper, Jean-Marc Leblanc has noticed shrinkflation is now part of his shopping routine. Smaller packaging at higher prices.
I'm spending $6 for that when it's maybe 33% less of a quantity.
Based on year-over-year price changes for food products across all Canadian provinces, New Brunswick had the highest increase at 3.7%. Nova Scotia was the lowest at 2.7%. The national average across the 10 provinces and 3 territories was 3.4%.
I've noticed a steady increase.
Dalhousie University professor and food distribution researcher Sylvain Charlebois says the drop in gas prices have lowered the cost of transporting food, which brings a positive effect in remote areas like Nova Scotia more than other provinces. Federal and provincial tax cuts and the GST holiday cut into food inflation rates depending on the province.
Our break was like 14%, and in New Brunswick it was 15%, I believe, and in Ontario as well. But most provinces, the break was only 5%.
According to Charlebois, one of the biggest challenges for regions like Atlantic Canada are interprovincial trade barriers that have a direct impact on transportation costs and the overall price of food. In all provinces, the price of grapes, berries, coffee, and ground beef are going up on a monthly basis, which makes this shopper skeptical when it comes to receiving good news news related to inflation.
Can you believe anything these days?
He anticipates prices to climb even higher and will continue to be a selective shopper searching for the best bargains. Paul Hollingsworth, CTV News, Fall River, Nova Scotia.
And Know Your Options is back. Tune in Wednesday at 3 p.m. Eastern to have all of your options trading questions answered by Chris Tom of Moat Financial. Send us your questions at knowYourOptions@bnnbloomberg.ca. Market Call is coming up next. Today on the show, we have Darren Sissons. He's partner and portfolio manager at Campbell, Lee & Ross Investment Management, and we'll be taking your questions on global and technology stocks. And let's take a look at the markets before we go on Bay Street and Wall Street, reacting, of course, to the news about the Fed south of the border. Now, the TSX, it's up right now. It's rallying this year. It's having a good year. I mean, 32% it's up for the year. Not bad at all for over the last year. That is a good little return. A couple of the ones worth mentioning that are going well right now, just quickly, the materials index, it's up 3% for today. I just wanted to point that out. And then for the year to date, it's up 12.5% for a year to date, just in the last, what we've had, 7 trading days. So it is rocking and rolling along. Some of the movers, Aya Gold, First Majestic, and also Lithium Americas is up 7.34%. And we'll quickly pop over to Wall Street and see how they're doing. They've bounced back a little from the start. It was a rough start. You can see the S&P 500 now back on the green side, up 0.1. Dow Jones down by 0.1, and then the Nasdaq's bounced right back. It's up by 0.34%. Thanks for watching Morning Markets. We'll see you back here tomorrow.